Hello everybody, this is Rich, better known as Creek Course. I'm here tonight to talk to you about the Nadex Iron Butterfly setup using the Nadex platform and NinjaTrader 7 in conjunction with the Apex Toolkit provided by www.apexinvesting.net. Alright, I would first like to start talking about some of the tools and the indicators that we use for this strategy here. They are a little bit different than your traditional tools, which I have down in the lower right corner here. I got the RSI, the MACD, the CCI, the moving averages, and I have my lovely little man here throwing garbage into a can because you can take all of those and throw them in the garbage can. The reason for that is those are all lagging indicators. And when you're trying to set up trades into the future, what good is a lagging indicator going to do for you? Not very good. I mean, if you're looking for an edge, and every trader is looking for an edge, what would be the most valuable information that you can have as a trader? Is it information about the past? Or is it information about the future? I would go with the future. But you know, when I first started trading, I was trading some stock options, things like that, and I thought that these here were the holy grail of trading until I stumbled upon ApexInvesting.net, and I'm seeing things in a little bit different light. And the reason is all of their indicators that they have and tools that they have are really geared towards helping you expect volume and understanding what the future holds a little bit more. You know, we have implied deviation levels. They're not standard deviation levels. Standard works with the past information. The implied deviation level is working with future information. The expected ranges. We can put in a certain time frame and get an expected movement high to low and close to close, and understand how far the market could possibly travel over a given period of time. We have a stop trigger plugin, which is an absolute game changer if you're trading on Nadex. We have a binary scanner because we trade binary options at Nadex, and this actually puts all the binary option contracts on one page right in front of you, and instead of going over to Nadex and pulling down all the drop-down boxes and trying to search through all the instruments, everything is in one spot for you right on ApexInvesting.net. We also work with magnet levels, which I'll get into a little bit later on. This is not a full list of all the tools that is offered over there, but these are the tools that I do specifically use for trading on the Iron Butterfly strategy here. If you're not already over at ApexInvesting.com and you want to learn more about the tools, get free education, learn some new trading systems, there's a lot on this website here. Just go to the home page here, click the home tab, and where I got my green arrow here, click start, and you will get going with that. There's all sorts of forums on here. There's traders helping traders. There's trade rooms where you can chat. People are in there talking about live trades. And just traders helping traders, like I said, and there's real live examples. There's news events that are posted on here, which I'm going to get into in just a second. So hop on over to ApexInvesting.net and see what they have to offer. All of the tools that I use in this video can be acquired through this website right here. Okay, just a quick overview of the Iron Butterfly, a range-bound neutral strategy. As you can see here, what you're doing is you're selling a binary contract above the market, you're buying a binary contract below the market. Okay, you have an open time here, and you have an expiration time here. The goal is to get this thing to finish in between the two strikes. Your max risk on this trade is $50. Your maximum profit on this trade is $50. That's when you sell the top one for $25 and you buy the bottom one for $75. This is doing one contract per side. You can do more contracts as you get going with this and increase your profits. The total capital to put up this trade at one contract aside is $150. That is not your total risk. Your total risk on this trade is $50. Reason for that is, if price is hanging out in here and all of a sudden it shoots up, you lose this side. So you had $75 in, you lose $75 on that side. But this side wins, you win 25. You take the 25 out of 75, you got $50. Okay? Just like if it stays inside, you win 25 on that one, you win 25 on this one. That's a $50 gain. Okay? So it's a premium collection risk reduction strategy. I'm going to show you how to reduce your risk even more. Okay, a lot of people have been asking me over in the trade pit, why are you trading these things so long term? And long term on Nadex is about 24 hours, 15 hours, 18 hours. Not like a stock option or other stuff like that where you're trading for weeks, months, even longer in some cases. So we're talking in terms of Nadex here. Excuse me. Okay, I just had to get a drink of water there. All right, so some of the benefits of trading these long term. Great for someone who does not have a lot of time to be trading. So we're not all full-time traders yet. Maybe one day we will be, but while we are still working, we can set these things up and let them run, basically. It takes a very short amount of time to do the analysis on them, and you only do it one time per day. And that's it. You could do them the night before, sometimes the morning of. So not a lot of time required to do that. Relatively stress-free, as you're not picking a direction on these. So if you can reduce the stress in your trading life, that's a plus. They can be automated, so it reduces the emotional decisions you're making. So you could set stops, you could set take profit orders, and have things automatically done for you. If you only win 50% of the time with this strategy, you're still profitable. You can make money while you're golfing or fishing. You can make money while you sleep or on vacation. Those sound like very good things to me. And the risk is super low, which we're going to get into a little bit more in just a minute. As I mentioned, you do not have to pick a direction. It can go up, it can go down, it can go sideways. So that is part of the stress-free nature of this trade, and you can make money while the market is flat as well on time decay. When time works for you, a lot more times you end up a winner. When time is working against you, it makes it much more difficult. So keep time on your side with this strategy. And when the option prices get very, very expensive, it's time to start selling, and that's what you're doing with this strategy. This is probably the most important slide in the presentation here, and it talks about implied volatility. The Iron Butterfly is a neutral strategy, but you still need implied volatility to find the longer-term setups. So where does the implied volatility come from? How do I get it? Well, there's two ways that I got listed here, and these are major news events and time. The first one is the news events. So when a news event comes up, say you're trading like on the Forex pairs or something like that, say on the Euro USD, there's some big news coming out. What happens is the implied volatility gets very, very high. Option prices get very, very expensive. Your strikes will be very, very wide when these news events are on the horizon. So that is a great time to be looking to set these things up, okay? Because you want the wider the strike, the more chance of you having the price in between there at expiration. Okay. Now, if there is a quiet week for news, and you want to set this trade up, you can still do it. Doing it by time, and when I say doing it by time, I mean putting a lot of time in between your strike time and your expiration. Again, 16 hours, 20 hours, something like that. So in the example I got here, if you're placing your trade at 11 p.m., right down here, if you're placing your trade at 11 p.m., For the next day expiration, say at 3 o'clock on Forex or 4:15 on indices, you have almost 3 full trading sessions between your strike and your expiration. You've got the Asian session, the London session, the US session. That equals implied volatility. Just as a news event equals implied volatility because the news release is coming, this has a lot of trading in between it, so there is implied volatility. So this means even if there's never another news event, you can still trade this strategy, and you could trade this strategy every single day because there's always trading sessions on trading days. So that's the nice thing about the strategy. It's an everyday strategy, okay? The other thing I hear a lot of people say, well, there's news coming out. There could be a lot of movement. I'm going to, not look at these iron butterflies. That's the worst thing you can be doing. That's the best time to be looking for the setups is when there's news on the horizon. Okay? You want wide strikes. You want implied volatility. You want super expensive options to be selling. That's the time to be looking. Don't go the other way and say, well, the market can be very, very volatile that day. I'm going to stay away from them until it's flat. If you're placing these trades when the market is flat, you ain't going to find a wide setup, that's for sure. If there's no volatility, you can forget about finding a setup. So the news events are good, and long blocks of time are good for this particular strategy. Okay, when should I set these iron butterflies up? The longer term iron butterflies could be set up as much as 24 hours before the expiry. The best time to set them up is as little as 15 minutes before a news release, or as early as 6 p.m. for a next day, end of day expiration. If there is a lot of implied volatility that day, or a lot of news scheduled, you can set them up the same day, even as late as 9 a.m. or 10 a.m. Even later in some cases. If there's say there's a news event coming out at 12 o'clock, you could set them up at 11:45 or 11 o'clock, whatever. The key is to have the implied volatility in the market. On days when you're placing the trade at 9 a.m. or 10 a.m., there will need to be some news. If there is not any news, you will not find a wide setup, as there will not be enough volatility or time to give a wide setup. The two key components, volatility and time. Okay, so when you're setting these things up around the news, you'll need to find an expiry where the pricing fits what you're looking for. So what are we looking for as far as pricing? We are looking for to sell the top for 75 and buy the bottom for 25, or we'll go as high as 80 and 20. So if you place a trade at 10:50 a.m. right before a news event, you may need to go out till the next day, even as late as 7 a.m. to get the pricing you want on the trade. So if you can't get your pricing, if you can't find that 75-25 or the 80-20, don't do the trade, okay? And also, these trades shouldn't be just built around the pricing. There should be some other analysis factors, that go along with it that make you feel good about doing the trade, which I'm going to talk about a little bit later on. Okay, so how do I know when the news is going to be released? Well, our good friends over at ApexInvesting.net have a news tab that is on their website. And you click on that tab, a drop-down box will appear. You can find an economic calendar on there. There's also a fully populated news trading plan to talk about what strategies you can be trading on the news that day. I'm going to hop over there real quickly and show you where that is. And right in here, if you click on News, Economic Calendar, this pops up, shows you all the news. You can go ahead days, back days, whatever you want to do, and this will list exactly what has happened for the news. It gives you the results of the news event as well. It's sorted, it shows the importance level, and there's 1, 2, and 3 bullheads. The 3 is the most important. I just keep the 2s and 3s on. You can change that right here if you want to, but I just keep the 2s and 3s on. And when you start seeing the 3 bullheads, and saying there's a news event coming out, say on GBP USD or on the GBP pairs, that's the time to be getting over to the binary scanner, which I'll show you in a little bit, but getting over to that scanner and seeing what the pricing looks like. Is there really wide strikes? On GBP, you could find binary option strikes that are 120 up to 200, points apart. So in times when there's news. So don't shy away when you see this of doing an iron butterfly. This is the time to be looking for that. But the news is super, excuse me, super important. If you're not cognizant of what is going on with the news, you could be setting these things up. It's going really good, and then 10 minutes before your expiry, the price goes shooting through the top boundary or the bottom boundary of your iron butterfly just because you didn't come over and realize that there's a news event. The first part of your analysis in setting these up would be coming over to the news chart here, seeing what news is coming out. If there's no news, then go trying to find one that is a longer term one. If there's no implied volatility due to news. Also on the news tab, we got the news trading plan, and this list for that week, you can look at it on a monthly basis as well and back it out. But each week this is up here. It shows the times of all the news, what to be aware of, what strategies you could be using. Like on this one, if you click on it, it's an iron condor. It tells you when to enter, what currency pair, the time the news is released, what type of profit to expect. So that's all listed right here on ApexInvesting.net, and all the work is done for you. So that's why I put on here, very, very important. What Nadex instruments can I use the Iron Butterfly strategy on? All. I put that nice and big, okay? Whatever instrument that is being offered over at Nadex, you can do this on. Whether it's commodities, Forex, indices, it don't matter. You could trade it on the U.S. small cap. You could trade it on gold. You could trade it on silver. You could trade it on the AUD. You could trade it on the USD. Whatever. Do not get stuck on one type of instrument, okay? Go in there, look at several different instruments. Find the best setup. Pick the one that makes you feel the best, that has the most layers of analysis that go along with your decision. Don't just go out there and just put them up on all the indices or put them up on every Forex pair. Just go look. Search them all. You don't be stuck just on indices or anything like that. Use them all to your advantage. It can be done on every single one of them. Okay, this is the stop trigger plugin. Okay, if you're familiar with Nadex, the ticket looks a little bit different here on the right here. This is the stop trigger plugin that has been developed by ApexInvesting.net. And is an absolute game changer if you're trading over there at Nadex. The Iron Butterfly is a risk reduction strategy to begin with, but there is a way to reduce the risk even more by using the stop trigger plugin. You can place a stop one indicative tick inside each strike of your butterfly to get you out around $50 if the indicative stop price is hit. So, for an example, like you sell the top one for $75. If you get stopped out, it gets you out at $50. That's a loss of $25 on that side. Now, if you win the other side, that is a gain of $25. So basically what you have is a break-even scenario. There is no loss on the trade. However, you do have exchange fees, okay? And I'm going to lay out the exchange fees for you that Nadex has. But on this particular setup I'm talking about would be $4. So your only loss on the trade is your exchange fee, which is $4 in this case. Okay, so that's not too bad. Only a $4 risk to possibly make 50, okay? Or 46 if you take the exchange fees out. So, if you're looking to reduce your risk even more, or to practically nothing on these things, the stop plugin is an absolute must. There are some courses over at ApexInvesting.net on how to use it. And you can go over there and learn that, and I suggest you do learn it, and I suggest you use it right away. Now, take profit orders can also be incorporated into this strategy. So what you can do, you can put a take profit order on each side of the Iron Butterfly. This does reduce the overall profit, however, but it's not a bad idea if you want to protect yourself from being stopped out on both sides of your butterfly in times of super high volatility. You can either use a stop trigger plugin, which we just spoke about, or you can use a Nadex take profit order. Either will work. The take profit order is up to you as a trader to decide if he or she wants to use it. Certain situations may warrant it more than others. It's up to you as a trader to make the decision if you want to put those in. I personally do not use them. I don't like to give up the profit on them, but if you want to use them, you're more than welcome to, and it's not a horrible idea to use them. So just know that that's at your that's available to you to do that. Now, it's very important, I put this in red because it's very important to remember that if your stop is hit, to go and cancel your take profit, or if your take profit is hit, you need to go cancel your stop. If it's left open, you could be triggered into another trade that you do not want to be in. Okay, and these are the Nadex trading fees. Nadex is very affordable as far as their what they charge per contract. And you can see here from 0 to 1 contracts, they're charging 0.90 per contract. Okay, the thing is capped out at 9. So if you start trading more than 10 contracts, okay, they are only going to charge you 9. So so if you're trading 10 contracts, it's going to cost you $9 in commission on each side of your binary, your Iron Butterfly. If you go in there and start doing 20, 30, 40, 50, 60 contracts, 100 contracts, still going to be $9 each side. So they stop you off there. Okay, so that's what the fees are. It's 0.90 per lot. Okay, so very, very affordable. It's under $1. And I do have some spreadsheets coming up in the next few slides, and in those I did round the exchange fee to $1 to make the numbers a little bit cleaner and easier to get the idea of the Iron Butterfly model. Okay, this is the Iron Butterfly model that I had come up with, and this is really to show you the power of using the stops, and I did some workups here and show you if you start trading these on a daily basis. So let's start on the left here. We've got the Iron Butterfly with stops, no take profit orders. I emphasize no take profit orders. I did not factor in take profits into my numbers that I'm going to talk about right now. Okay? If you're going to do that, you got to factor those in here, and it's going to reduce your profit numbers a bit. Okay, let's start at the top. Right here, I got this labeled entry, and I got top binary, and I got bottom binary, and I got cost here. Okay, if you're getting in at the 75-25 level, which we spoke about, okay, your cost is going to be $75 on each side of that trade. So you got a total capital investment right here of $150. Okay. That is not your total risk, okay? 150 is just the capital needed to put the trade up, okay? Now we're going to come down to results, and I got the 3 scenarios here. I got if you're stopped out on the top, but the bottom wins. I got if price stays in the middle, the optimal situation that you're looking for, and if the top wins and the bottom gets stopped out, okay? Now, if you get stopped out at $50, on the top binary, you're going to be losing $25. Now, this is when you have your stop in place, okay? So you'll lose $25 on that side. Instead of losing a full $75 on that side, you're only losing $25, okay? Bottom wins, you win $25. Again, that is a break-even scenario. You got your $4 in exchange fees, and you're -4 on the trade, okay? Now, if the price finishes in the middle, that's where we want it, right? You would win 25 on that side, 25 on the other side, minus your exchange fees. It's a $46 profit. So if you look at this, you're going for a gain of $46, but if you do not make it, you're only losing $4. That's insanely good, okay? And the other side, obviously, you lose $4 if the bottom gets if the top wins and the bottom gets stopped out. That's just the inverse of this one here. Now that's again if you're getting in at $75. Okay, we go over to the 80-20 scenario. Your cost on each side would be $80. Total cost is increased by $10. It's now $160. Again, that's not your total risk. Excuse me. Now, if you get stopped out on the top at 50, your loss instead of 25 is 30 now. If the bottom wins, you win 20 instead of 25, and your exchange fee stays the same. So if you do not win this one, it's a $14 loss instead, just because you're paying a little more to put the trade on. Now you come down here and a winning trade where it finishes in the middle, you win 20 instead of 25. You win 20 instead of 25. You take your $4 exchange fees out. It's $36 instead of 46. So you can see the more you start, putting up to do these trades, the less your profit is, obviously. Okay, I put preferred here because you want to stay in between the 25-75 or 80-20. I do them sometimes 81, 82, somewhere in there. But if you start getting out to $85 cost, you can see your cost goes up to 170. Your loss is 24. Your gain is only 26. So you're back to a 1-to-1 scenario. And 1-to-1 is not a terrible scenario. I don't want you to think that's very, very bad. But if you can be getting something that you're only risking $4 to make 46, try to be closer to these numbers over here is what I'm saying. Okay? So the rules are, as I mentioned, try to keep the cost between 75 and 80. Can go as high as 81 or 82. You can set the take profit orders, but that's going to eat into your profit. When you put a take profit order in, okay, like you sell a binary for $75 on the top, right? So what you're trying to do is that you want that thing to end at 100, okay? You're putting the take profit order in at, say, 95, okay? So it eats away $5 of your profit. So you got to keep that in mind. This is why I don't do the take profit orders. I don't want to give away the $5 on, the $25 I'm going to be making. So if you want to put them in, you can. You could put them in at different levels. You could put them in at 4. You could put them in at 5 or 96 or 90, 96, 95, whatever you want to do. But just note it's going to take your profits down a bit. Okay? Very important here. When you're setting the stop trigger plugin, you got to set the indicative price to at least 1, maybe even 2 ticks inside your strike price. Okay? When you set up the stop, it's going to automatically. Oh, let me go over and show you real quickly. I'm going to pull up a ticket. Okay. Now here's the stop ticket. Okay. You can see the strike price on this ticket is 5772. Okay. The trigger price automatically gets set to that. Okay. So if you want to be stopped out, you need to move this up 1 or 2 strikes, whatever direction you're trying to do. So if you're trying to, sell when it comes down to this, you need to move this up to 73 or 74. Okay? If you don't, it's not going to get you out exactly at 50. Okay? It'll often get you out at 60 or 65. Or 45, going the other way. So move the indicative price in 2 ticks to ensure that you get out as close to 50 as possible. That's very important. I've been filled at 65 at times because I had the stop set right at the strike. So keep that thing inside your strikes by just a little bit. Okay? Okay, so here I did a workup now. This is if you're getting in at that 75 level we talked about, the optimal level, okay? And this is doing 1 iron butterfly per day, okay? And doing 1 contract on each side. So that's a total of 6 of these per week, okay? I put 6 here because you can start doing these on Sunday night. So you do have 6 days to trade these, okay? So in the next column here I got the outcome. I got a win. I got a loss, I got a win, a loss, and a win. So that's 50%, okay? 3 wins, 3 losses. First day, excuse me, you win $46, okay? The next day, you lose 4. The next day, you win 46. The next day, you lose 4. The next day, you lose 4. The next day, you win $46. So you've only done 50% in your trading, and you are profitable. You are profitable of $126 for being right 50% of the time. But my favorite part about this is if you come over one more column right here, and your total risk, you had a $4 risk the first day, the second day, third day, fourth day, fifth day, and sixth day. over the course of the 6 trades, you had a total risk of $24. That's pretty impressive, okay? So you risked $24 to make $126. Obviously, the capital you need is $150 to do it each day. If you do total up, that's $900 for the course of the week, but it's just $150 each day, okay? Now, you say, well, maybe 126 isn't really that much money. Well, all you have to do is not start doing tons and tons of these things and putting on 14 of these things a day. Just add contracts, okay? On 2 contracts, if you did 50%, you'd win $252 that week. 3 contracts at 50%, $378. 4 contracts, $500 a week for being 50% right, okay? Go up to 10. Each week, you could be making $1,260 for being right 50% of the time. Your total risk is $40 for the week to make $1,260. These are some insane numbers here, okay? So, extremely, extremely powerful. Again, only 1 contract aside, 6 days, 6 trades per week gets you $126 a week for being right 50% of the time. I did do it at your 80 level. It does knock your profit down, quite a bit. So this is why I'm telling you it's important to get as close to the 75-25 as you can. Don't be putting these things on at 86 and 88 and things like that. It's just not even worth doing that. But again, this is a 50% outcome here. $66 you would make. Add the contracts again, 10 contracts. You're still making $660 a week. Okay. So I did. I did do a workup here if you were doing multiple iron butterflies a day, and this is doing 6 per day. I don't recommend you do 6. If you do work your way up to doing 6, that's another story. Do not start out doing these things, 6 and 7 butterflies. It's very difficult to keep track of all of them. You'll see what I mean when you're setting up stops and take profits and things like that. Start this small, get up to doing 1, 2, maybe 3 of these things, but the best way I should say to increase is just by adding contracts, not by doing additional trades. But anyway, if you did get yourself up to doing multiple iron butterflies, and 6 per day at a 3 win 3 loss scenario, 50% again, you can make $126 a day. That's $756 a week right there. Okay, so pretty powerful. If you can keep it around $75 to $80 and only be right 50% of the time. If you really hone your skills here and do some good analysis and you do better than 50%, it could be very, very nice for you. So, but just know that a situation where you only win 50% of the time, you can still win. That does not mean go in there and get careless because you feel that you can lose 50% of the time. Doesn't really matter. You need to still do good due diligence, do good analysis, and get the best setups. Okay, again on the risk, if anyone listening is familiar with Daryl Martin over at ApexInvesting's 5% rule, you know what I'm talking about here. If you're not familiar with Daryl, the 5% rule that he talks about is if you have a $1,000 account, he says on any given day you should not risk more than 5% of your account, okay? And you should be targeting to grow your account by 5%. Okay? So, basically, on a $1,000 account, $50 is 5%. Okay? So, you're trying to gain $50, and you don't want to risk any more than $50. Well, if you did these trades, say you did 6 of them in a day, okay? You have a 4, 4, 4, 4, 4, and 4. $4 risk each day. That is $24, okay? How much is 24 in percentage to 1,000? It's 2.5%. So it's half of the risk that is suggested for a solid, money management system or risk management system, okay? On the other hand here, you're targeting to make $50. So you have the potential to make $50 on each one of these. So that is very close to what you're trying to do. This fits very well into that model. Okay, so super low risk here. And this just goes on and just shows you that the bigger account, if you were down here at, say, a $5,000 account, $250 is 5%. Well, you're only risking 120 here, right? Okay? The profit potential, you could possibly make, $230 when, 5% is 250. So it's pretty close. It fits in very, very nicely. All of these, 2.5% risk. I mean, that is super, super low. And this has all the exchange fees factored in. Okay, so this is an example of a real trade placed on 11/7/2014 on the TF contract. Okay, that's the U.S. small cap. And I put down here in parentheses, this is a super great example right here of multiple factors contributing to a decision to take a trade. Okay, you can see this, the TF contract here. Okay, and what I got on the chart is some tools that are available over at Apex. And the first thing I talk about right here, I put a gold box around it. This is your expected range, okay? So I specified a period of time. I was doing my analysis at 12 a.m., midnight, looking for expiries on, this is an indice, so at 4:15 the next day, okay? So it's 16 hours away. So for this block of time, this 16 hours, the market could move down to here, it can move up to there. That's the expected range that's plotted on my chart right there, okay? So first thing you want to do is find some strikes that are as close to the edges of my box. And this is not too bad. I've seen better. I've seen where they're outside. I mean, that's even better. But you want to get them as close. This one is okay. So I went ahead and I did my next level of analysis. Okay. What I have on here is, you can see they're very printed lightly on here. I could make them darker, but I keep them light on my chart. But these are the implied deviation. And you can see right here, this line right here is a +1 deviation. We are looking for a 1 deviation move in the market most of the time. If the market moves 1 deviation, a lot of times it stalls out and reverses. I mean, not to say that it can't go through there. It does sometimes. It goes up to 2, goes to 1.5. But it's a good measurement that the market could start to get exhausted around those levels. So in this case, this 1 deviation is this light line right here going this way. My strike is above it. So it is kind of guarded in a way by a 1 deviation. Okay, so that's another super great thing right there. Alright, this side does not offer that, but this has something else going for it. This one's only down to about a 0.7. But this side has, these dotted lines are called magnet levels, okay? Magnet levels are similar to your traditional support and resistance lines, okay? But they are way better. Support and resistance lines just really go from peak to valley, valley to peak, and some of those peaks and valleys really don't have a whole lot of meaning to them. These lines work off of volume, okay? They're drawn off of volume spikes. And the volume spikes and really highlight where all the orders are in the market, okay? And I've learned over time that the market goes to where the orders are. And if you can highlight where the orders have been and where they are, then you can kind of see where price may go to, okay? And a lot of times the price stays right in between these things, gets, goes to them, gets stuck in between them, like that. And if you actually backtest this, you can see how the price reacts to these levels. So, granted, this strike right here that it needs to stay above did not have the deviation like this. It's not guarded by a deviation, but it's got 1, 2, 3, 4 levels of magnets, okay, before my strike. My thinking on the trade was, if this does not go up, and it does go down like it did here, that it would get stuck ping-ponging around in between some levels. And if you're doing premium collection, and you want the market to go nowhere, this, what happened right over here, is an absolute dream come true. Okay, it just got stuck in those magnets and didn't go anywhere. And the price finished right up here, almost right in the middle of the Iron Butterfly. It did come down and touch my strike, but it was a quick spike, and it did not trigger the indicative price on my stop, so I did not get stopped out. And this trade worked out pretty darn nice because I was hoping for the price getting stuck in all these magnet levels, and it did. So if you can see what I did here, I have expected range analysis. I got deviation levels. I got magnet levels. I got 3 different levels of analysis backing my decision to take this trade, okay? And this is what you're looking for in a trade. It's not going to work out 100% of the time. You're going to have some losses, but put some stuff in your corner that can make you feel good about taking the trade. Don't just come up here and say, oh, well, there's 75 here and there's 25 here, let's take the trade, not look into anything. So that's kind of how I walked myself through this trade. And you can see here, like I said, it's 16 hours, okay? 16 hours until expiration where I set the trade up. So I was setting this up way before the expiration. Okay, I want to talk a bit about demo trading because it's very smart to be doing these new strategies on a demo account first. I think we're all guilty of going out and trying it with real cash and kind of getting burnt a little bit. If you can, do them demo. But the thing about demo is a lot of people kind of get carried away when they're demo trading. And I wrote here, I said, trade like you're trading a real account. Do not go in and place 10 different trades, risking a ton of demo money. This is completely pointless. The point of demo trading is to gain confidence in the strategy and your execution of the trade process. You do not want to start any bad habits while you're trying to gain confidence. People try these, they see that they're working, and then they start putting 10, 12, 13 of these things up a day. And they're even doing setups. A lot of people, we have the trade pit where we share our trades. And people are setting them up, and the setups to me they don't look very good. They're not trades I would ever take. I'm not saying that they're not working out. They do work out sometimes, but that's not what a trading system is. There should be some guidelines that you're following to do the setups and to give yourself the best opportunity to succeed in the trade. A good example I like to talk about is the NFL preseason. The NFL preseason is comprised of 4 games, and the teams come out and they play the games as they were real games. Okay, they mean nothing, but they're playing them like they're real. They don't come out and throw 25 deep bombs down the field just to see what happens. They practice like they're going to play come week 1. So that's what you need to be doing with your demo trading. Put on 1 trade, put on 2 trades at the most, okay? But try the 1. See how the execution works. See how the order process works. See how you're getting yourself out of these trades. Work on the execution of the trades. Just throwing up 10, 20 trades is not a smart idea when you're trying to gain some confidence in a strategy. And you also need to find some points where if it's not working, what am I doing wrong? Where do I need to fix this? When you got all this stuff going on, you're making a lot of noise for yourself. If you want to start trading with real cash quicker, trade only one trade or 2 trades, like I said. In demo, get used to it, and then move on to real money. Have a purpose, okay? I put my definition here. The reason for which something is done or created, for which something exists, okay? Don't just settle. Be sure to find the pricing you want. If you cannot find the pricing, don't take the trade. Meaning, don't go in there and take $88 on each side of this thing or anything like that. Find the 25, find the 75, find the 80, find the 20. Don't stretch it too far past that. As you saw in my profit margins, it's going to taper away pretty quickly if you start doing the trades too expensive like that. Okay? Always have a purpose or a reason for taking any trade. And if you can find multiple reasons, like in my TF example I just talked about, that is even better. This is not to say every trade is going to win. You always have to expect losses. Okay? We have a nice risk management and a risk reduction part to this trade, so you should feel even more confident that even if you lose with this trade. I mean, if you're only losing $4 a trade and you're winning 46, if you get into 25.75, think about that. I mean, essentially, if you lost 10 trades and you won the 11th, you would still be up $6. I think you can win more than 1 out of 10 trades. So don't get upset with a loss. Can stay with the system and don't get carried away, and you should be fine. Okay, so if you do everything right on your end and execute properly, that is all you can do. The market is going to do what it does. You have no control over what the market is going to do. You only have control over yourself. So if you do everything right and you still lose, you should not be upset. If you're just throwing up any trades for no reason and you're losing, you're going to get very upset. And the absolute worst thing that happens is you actually win one of those trades, as this makes you think you could just keep doing that. It's a recipe for disaster. Do everything in your power to execute the trade system correctly. Then, if it doesn't work out, you can make some small adjustments and test those and see how that works. Okay, we got TeamViewer. If you're not familiar with TeamViewer, this is an absolute essential part of the strategy. Basically what this does is gives you the ability to control your computer remotely. Most of the people that will be doing this trade they're doing because they don't have time to be sitting in front of their computer. They're going to work. They're going to do other things. Hopefully you're at the level where you're golfing and that's why you're away from your computer. But most of us are working and doing other things. And if you can't see your computer, that could be a problem because, as I mentioned, if you have stops in or take profits in and one gets hit, you have to go in and cancel the other. Okay? And I know a lot of you are probably saying, well, there's a Nadex app for that. Well, the Nadex app should not be used for doing this strategy. And the reason why is when you open the Nadex app on your phone, it closes the Nadex platform on your desktop or your laptop or whatever you have at home. And when that gets terminated, that terminates your stop. So if you have another trade on with a stop on it, it's going to get canceled on you. So you do not want to be going into the Nadex app because that automatically terminates your session over on your desktop or laptop. So you need to get TeamViewer. You can use it on your iPhone and I believe your iPad or tablet. Absolutely essential to do this trade. Do not use the Nadex app. Can't emphasize that enough. This is a little chart I put together. If you're going to be doing these setups, I did an hour-minute chart. When you're setting them up, you're going to be needing to put time into your expected range boxes and offsets. So what this is a quick reference, so you don't have to pull out a calculator or be doing math in your head all day. So I have this right next to my computer, and it's a quick reference and helps out a lot. Just a quick word about the offsets here on the expected range. I had some questions about this over at the trading pit. The offset is the distance from the left edge of this box, where your range is starting, your time period is starting, to where current price is. You need to get this box to start over here. So you move it to the right. You do not move them back. You move them to the right. So the way to achieve that is you have to calculate the amount of time that is in between this edge of this box and where this number 2 is at the current price. As you can see down here, the edge of the box is at 11 o'clock. Current price is at about 14:30. If you come back over here, that's about 3.5 hours. So you got 3 hours is 180 minutes, and 30 minutes, that's 210 minutes, okay? See right there, 210 minutes. So you will put 210 minutes into the offset box on the indicators list, which I'm going to show you in the next slide. Please note, if you have more than just a high-low, if you have the high-low and the close to close within it, you need to put the offset in both of those settings, okay? Or your boxes are going to be all staggered, okay? So you click on the indicators logo here. You click on expected range, okay? And then you come over here and you input the 210 right in there where it says offset, Okay, that tells it to move it over 210 minutes. Click OK. After you're done and the chart loads up, this is what it should look like. Price should be right at the edge of your box. Okay? So that's what you need to be doing for that. Now I'm going to pause the video. I'm going to get ready to get set up to look for some setups, and I'll be right back. Okay, I went in, I did some analysis. I went ahead and did it, and I'm going to go over what I did with you because I can't keep going in and out of the charts with my NT7 right now. It's running very, very slow and bogging down. So I went ahead and set them up, and now I'll show you exactly what I did. I first off went and looked over here on the economic calendar over at ApexInvesting.net, and right away you see there's 3 bullheads here and 3 bullheads here on each of these, all GBP news coming out between 4:30 and 5:30 coming up this morning, the next morning. So on 11/12, and it's 11/11 right now. So this is tomorrow morning, and this is your first inclination that you need to be looking at pricing on these instruments. So what we do, we come over here, go over here to GBP USD. I'm looking at the end of the day, and when I set it up, there was one here. I think I got it for $18 or $19. The 6,000 and the 58.40. So I went ahead, I plotted them on my chart. Here's the 6,000, there's the 58.40. I went ahead, at the time it was 1,050 minutes till expiration, so I went ahead, I went in here, I went to expected range, I went, and this is your high to low expected range, period of minutes, 1050 is what I put in there, hit OK, I needed to put an offset, and it was 1020, so I put the offset into 1020, went down, I hit OK. So I got my price right in the beginning of this box, okay? So, off of this, I see that my strike is relatively close to the edges of the expected range, so that's the first good sign. You can see in here there's a +1 deviation, which my strike is on the other side of. You can see over here there's a -1 deviation, which my strike is on the other side of. And the best part about this is there's all these magnets in here. Look at all these magnet prices levels in here. Okay? So I love it. The magnets are inside my strikes. And as I said, this is a news trade. Okay? So there's a lot of volatility expected. Implied volatility, which we're benefiting from. As you see, we have a 160 point wide spread here on the binaries. When you have this much volatility expected, and you're setting the trade up this far in advance, I do not put the stops on now. I let the volatility of the news happen. If, for whatever reason, the price comes out and doesn't come back in there, I'm not going to be too upset because the total risk is only $50 anyway. So I'm going to let this trade mature. I'm going to put my stops in after the volatility comes out. Anytime after 5:30 tomorrow, you know, come here, check, see where it is. If price is right back in here, put them in. Go right ahead. Even if it's hanging out in here, put it in. Put your stops in. Let the trade mature. Then put your stops in on a trade like this. Because when you get these news events, this thing goes spiking way up here. And, you know, in 15 minutes, it could be right back here. And you'd be stopped out of the trade, and the trade ends where you wanted it to. So with the news trades like this, let the trade mature. Do not put your stops in at the time you place the strikes. Okay? Very important. I also went over to GBP JPY. Okay? And if you come on the scanner and put in GBP JPY, okay, it's going to show you all the strikes and go to 3 o'clock. You have one on here that is 200 pips wide. So right away you say, oh, terrific trade, let's go put it on. Well, let's do some analysis. Okay, that's the USD. Let's do GBP JPY. Pull up the chart. I put my strikes on, did my ranges just like I did before, 1080 minutes. Okay, so on the range is not too bad. Pretty close to the edge is not bad at all. But you look at this, and the strike is only barely a point 0.5. This one is down the deviation and a half. There you can see 1.5 right in there. So that's good. However, you only got two magnets in here, right? But look down below this. I'm going to scrunch the price up a little bit here. Look below this. If this thing goes like this, instead of going up, right, we can have a real problem here. The price, when it gets into areas, when it gets into areas like this, it loves to ping pong around inside these magnets. So even though this is a wider spread, it's 200 pips wide, there's a great danger of this thing not coming back in here, because all these magnets down here are going to cause this thing to get stuck in here if it gets there potentially. Okay? So there you go. You can see all the magnets down there. You can see, look at what happened when price last time came up here. Price came up here, it hit that level, and came right back down into, look at this. See what happens here? It gets ping-ponging around in areas like that. Look at this. It's all stuck in there. So if this thing comes down here tomorrow at 4:30 in the morning, there's a darn good chance this thing's getting stuck down here. Don't take this trade. You might be salivating because it's 200 points wide. This is why you need multi-levels of analysis to do these. They're simple. I'm not trying to make them difficult or confusing in any way, but make sure you have stuff that makes you feel good about taking the trade. I don't feel good about this trade at all. I don't have confidence that these two magnet levels are going to hold this price here with the amount of volatility that's expected. I see this thing coming straight down in here and being stuck. So that's my reasoning for not taking this one over the other one. Both may work out, both may not. I'm putting the odds in my favor. That's all you can do. Okay, so those were my setups on the on JPY news that's coming out. And, we'll monitor this one. And like I said, I'll put my stops in after the volatility happens.